Hello everyone, I am Prabhat, co-founder at InvestMyFund. Welcome to our new episode Know Your Fund Manager. Today we have a special guest Sukanya Ghosh, Senior Fund Manager at SBI Mutual Fund. Over 15 years of experience into the financial market, Sukanya is a chartered accountant by profession and take care of the quant strategy with SBI Mutual Fund. Welcome Sukanya.
Thank you.
Today we have taken a very important topic called quant investing. So let's start with the basic introduction. Sukanya, what is quant investing, also known as factor investing, and how it is different from traditional investment?
So, quant investing is basically a rule-based framework. So, you create certain rules that are there, you create a framework around that, and you have a very disciplined way of managing that. You rebalance it in a specific time period. And what are factors? Factors are just natural styles or traits that some stocks may have. So it can be that some companies are naturally cheaper than the others, so they will be considered as value stocks. There are certain companies that are currently seeing growth, so they would be considered as growth stocks. Then there are certain businesses or companies that have been very stable, have performed across many years, so they would be considered as quality stocks. So this is just a way or trait that some stocks may have, and that makes a factor. And you can create a framework around that factor, saying that we will create a portfolio looking at these particular factors. So that is what's called.
Okay. So, Sukanya, what is the key benefit of investing in factor investing, and how it is going to benefit retail investor and also help investor to invest in a disciplined way?
So, what we have seen is that when you look at markets and different market cycles, you'll see certain stocks or certain styles perform in different market cycles. So, you will remember that last 2-3 years, value stocks did really well. Before that, quality did really well in Indian markets. So, every market cycle will have different factors or styles that will work, and that is naturally coming from the characteristics of those factors. Like quality stocks are stocks that are very stable businesses, so they fall less than other stocks, and hence they are better in a falling market. Value stocks are able to capture the upside, so they do really better in a rising market. So you have different traits, different styles, and by investing in these different traits, you will be able to kind of get the benefit of the different market cycles that happen.
So quant strategy heavily relies on data and the strategy which they are working on. So how SBI Mutual Fund leverage these strategy and how the framework works?
Sure. So yes, quant or any factor investing, rule-based investing, we have to, when you have a framework in mind, you have to first test whether it has worked across different market cycles. So we have used a lot of data to kind of first test the framework, stress test the framework in different scenarios, market scenarios, and then finalize final framework that is there and that is being used by and that is obviously where we are using data. Our framework is a multi-factor framework where we invest into 4 factors: quality, value, growth, and momentum. And what is unique for our framework is that we kind of move across the 4 factors. We don't have a static allocation saying that quality has worked in Indian market, so we will have a higher weight for quality. The weights go moving based on which factor is working. So when value was working, value weight increased. When quality is working, quality's weight is increased.
So Sukanya, globally, like value and momentum have worked really well for the global market. So are there any specific sectors which particularly going to work in Indian market?
We don't try to forecast or we don't try to predict what's going to happen. What we are seeing is, what we do in the framework is that what is working currently, we slowly increase the weight of that factor. And what our framework currently sees is that quality has started working in 2024, and hence it is slowly, the weight is increasing in the framework. So currently we feel quality has been doing well.
So I think you have back tested your model, and the model has outperformed the BSC 200. So how do you see it's going to benefit domestic investor, and what kind of a return an investor can expect over the period of time?
So we have back tested this framework from 2005 till 2015, and from 2016 we have been running this in-house live. We monitor the portfolio and the performance. What I would rather say, rather than putting a number to it, is that the framework is kind of designed to say that it will be an all-weather fund, where it may not be the best performing, but it will try to not be the worst performing. It will be average or above average. It is an all-cycle fund. So that's how we are trying to create the framework.
What kind of a risk is involved while investing in quant strategy? Have you find any factors where a model has underperformed the benchmark?
So this strategy is an equity strategy. It's investing in equity markets. So obviously there is that risk, and investors who are investing into this kind of a strategy has to be prepared for equity market risks that are there. What happens in any framework, that when certain style works for a small period of time and then quickly another factor starts performing, there's whipsaw movements. Sometimes a framework like this may have a short period of underperformance, but once that style gets established into the market, then it is able to recover faster.
Okay, got it. Sukanya, we have seen AI everywhere. We have seen in technology, we have seen healthcare. Now we have seen into the investment, like SBI is coming with the quant strategy. What kind of a future do you look for these kind of a strategy, and how it is going to benefit retail investor?
So AI obviously has a lot of benefits, and it is being used across industries and different things. I think in this framework, we have not tried to keep it as a black box thing where we don't know what is being thrown up as a portfolio. What we have done is that we have tried to create a rule-based one. This is a disciplined way of investing, and using a lot of data, so that data is giving us the result rather than some views that we may have, personal views. So that is where we are using the computing power. We are using a lot of data. We have tried to make it as understandable as possible, so that we know when certain stocks are getting certain weights and not kept it black.
Sukanya, finally, what advice you want to give to the investor who is looking to invest into factor investing?
So I think factor investing is something that is recently come into Indian markets. People have started appreciating that factors exist. This is a smarter way of playing an index. So in index, you will, or in ETF, you will just be married to that index. In factor investing or multi-factor investing, it's a smarter way of kind of taking passive investing. It is in some way rule based, so it is not fully active where a fund manager's views come, but it is also not fully passive and just mimicking a benchmark. So it's somewhere a good mix between the two ways of investing.
Thank you, Sukanya, for joining us and providing insightful session on quant and factor investing. Thank you for joining us.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.